So I want to direct your attention to the one provision of the Constitution, the authority to create money, which can be found in Article 1 and Section 8, which states very simply, the Congress shall have the power to coin money, among other things. In disregard of our founders' strongest warnings against the establishment of a private central bank, in 1913, coincidentally, 100 years ago this year, under some very questionable circumstances, the Federal Reserve Act was passed and signed into law, creating a private central bank given all of the authority to create American legal tender. Just imagine the mischief that you and I could get into if we were given the authority to create money and were practically immune from scrutiny for what we do with it. Just imagine. This is the genie in the bottle. The genie gives you 3 wishes, but all you really need is one. To wish that all of your wishes would always come true. Well, that was the wish of the private central banking system of the world in 1913. And the Congress and the President of the United States acted the part of a genie and made that wish come true. And so now, because of the banking system has unlimited resources and is only under cursory scrutiny, the Federal Reserve literally owns a license to steal. So who owns the Federal Reserve? Because at the time they cleverly used the term federal in the name of the new private central bank, we're all asked to assume that this is a U.S. federal government entity. But even the Federal Reserve System, the Federal Reserve, denies this notion. According to the Fed's website, the Federal Reserve System fulfills its public mission as an independent entity within government. It is not owned by anyone and is not a private, profit-making institution. The Fed continues to say, the Federal Reserve can be more accurately described as independent within government rather than independent of government. So let's look at what the Federal Reserve is telling us. Because the Fed is independent and because it is not owned by anyone, the Fed is sovereign. The Fed is a sovereign government within the limits that the Federal Reserve Act allows, which are extremely general limits and not rigorous, and which only the Congress of the United States has any authority to effect. So get that. In 1913, the Congress of the United States created a sovereign government, a shadow government, if you will, that operates within the federal government. And the Congress delegated its constitutional authority to coin money to that shadow government. Let's read further. According to the Fed, the 12 regional Federal Reserve banks, which were established by the Congress as operating arms of the nation's central banking system, are organized similarly to private corporations. The reserve banks issue shares of stock in member banks. The reserve banks are not operated for profit, and ownership in a certain amount of stock, of course, by the commercial banks who are operated for profit, is by law a condition of the membership of the system. And so, according to the Fed, the 12 regional Federal Reserve banks, which are operating arms of the Federal Reserve System, issue shares of stock to commercial for-profit member banks and are therefore owned by those commercial for-profit banks. In summary, the Fed tells us that here we have private commercial banks in all regions of the United States, which together own the 12 regional Federal Reserve banks, which are the arms of the central banking system. And at its core is the Federal Reserve Bank, which is a shadow government operating inside the federal government and which owns all authority to print and distribute money according to its own desires. So what do they say? Power corrupts, and absolute power corrupts absolutely. In that money is power, and in that the Fed possesses an absolutely unlimited storehouse of money. The American banking system, as it is operated, is nothing but a recipe for absolute corruption. few years ago, Alan Greenspan confirmed what I'm telling you about the Fed's sovereignty. Jim Lehrer asked Greenspan about the proper relationship between the Fed chairman and the President of the United States. And here is that exchange.
What should be the proper relationship between the chairman of the Fed and the President of the United States?
Well, first of all, the Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take. So long as that is in place and there is no evidence that the administration or Congress or anybody else is requesting that we do things other than what we think is the appropriate thing, then what the relationships are don't frankly matter.
So according to Alan Greenspan, essentially, as long as the Federal Reserve Act is in place, the relationship between the President of the United States and the Chairman of the Federal Reserve really doesn't matter. The Federal Reserve is insulated from the United States government, except as Congress may act to change its responsibilities. One inescapable conclusion is that in the end, the commercial banks that are members of the Federal Reserve System own shares in a shadow government, one that operates within the American government. The other inescapable conclusion is that by virtue of its relationship to its shareholders, the Federal Reserve System possesses a fiduciary responsibility not to the American people, but only to its shareholders, the member banks. That being the case, the commercial banks of the Federal Reserve System, through the Fed, possess an ownership in a direct influence over a shadow government that operates within the people's government of the United States of America. And the people have no influence over it whatsoever. We're just supposed to trust these people. The Federal Reserve System, therefore, exists for the private purposes of the commercial member banks and not directly for any national purposes of the American people. This system owns a monopoly on the printing of American legal tender. This system owns the money that it prints. The Federal Reserve notes are called notes because they represent debt owned back to the Federal Reserve System. Every dollar of Federal Reserve currency that presently resides in any account that you may have, or any account in the entire world, is ultimately owed back to the Fed and is in some form or fashion paying interest to the Fed through the Fed's member banks. Let's see how that works. Every Federal Reserve dollar is created the same way. It is issued as a loan in exchange for a promise to pay back. So each dollar in circulation represents a dollar's worth of the overall debt owed to the Federal Reserve System. But you might say, well, look, Hank, I paid off all my loans, I don't owe anything to anyone, and so I don't have any debt. My answer to that is that somewhere, someone owes more money than they have the ability to pay. So much more than their equal share of the overall debt owed by the money supply, that they owe both their share and your share as well. So all of the money in the outstanding money supply is owed to the Federal Reserve through its member banks. And each dollar of debt owed to the Federal Reserve System commands an interest rate that must be paid back to the member banks. In this way, the entire American money supply is returning a constant yield back to the Federal Reserve System. And for that reason, the Fed is constantly motivated to increase the money supply. So what's wrong with that? I mean, if you take out a loan, you have to pay it back, right? Well, think about it. Even the United States government, which is owned by the American people, all except for the shadow government part owned by the banks, pays its bills with Federal Reserve currency. And because in 1913, the Congress outsourced its authority, given it by the people to print legal tender, to this private central banking system, even the people's government is forced to borrow at interest to pay its bills. And because it gave away the central banking function to this private central bank with private motives, the people of the United States, through the United States Treasury Department, are the ones who are forced to pay the interest on the debt that its government accrues. So think about it. The government of the United States gave its right away to create free money. And ever since then, even the United States government, supposedly sovereign in its own right, has to pay interest on the money that it borrows. We need to begin to learn to look at our fiscal concerns in the light of this inequity. Does the Federal Reserve pay interest on the money that it creates? No. The money the Fed creates is nothing but fancy-looking monopoly money. The Fed doesn't owe anything to anyone. If it did, it would just print the money and pay them off. And how the Fed works is precisely the way the United States Treasury Department, under the supervision of Congress, is supposed to operate. That is exactly what Jefferson told us. That's what all of the founders told us. Every function of the Fed could be, and rightfully should be, operated under the auspices of the United States Treasury Department and use national sovereign currency rather than private currency. And if that were the case, the United States government would rarely, if ever, have to borrow. As long as the government stays within the scope and size restricted by the Constitution, the cost of running the government would be covered by the interest it receives directly from the private banks who borrow from the Treasury to make loans in the American and international economies. In 1913, not coincidentally, the 16th Amendment, which allows the federal government to tax people according to their income, was officially ratified, again, under some very questionable circumstances. They had to do that because the newly created Federal Reserve Bank was going to steal the American government's source of income, that income being the interest on the money supply. And that is the only reason why we have an income tax today. So in summary, every dollar of Federal Reserve currency you possess is actually owned and owed back to the Fed. Possession of Fed currency is possession of debt. The entire money supply pays a yield back to the Federal Reserve System. And the more money in the outstanding money supply, the more profit the Federal Reserve System makes. Now here's the hitch. The hidden truth of the entire illicit monetary scheme, as it is being operated under the authority of the Federal Reserve, shadow government money creation machine. Because the cost of government itself is a drain on the private economy, and because the drain of paying interest back to the Federal Reserve on every outstanding dollar in the money supply, there is not enough money in circulation to pay off the national debt without impoverishing the private sector. And the more the government borrows, the worse that equation gets. Because the money supply only increases by the issuance of debt in the form of a principal amount owed back to the Federal Reserve. And because the Federal Reserve does not issue money to pay the interest on that principal, consequently, there is not enough money in circulation to pay both the interest owed on the money supply and the principal owed back to the Fed. The interest owed to the Fed on the outstanding money supply, therefore, can only be paid by borrowing more debt from the Fed and paying the interest on the old debt out of new principal just borrowed. I'm going to repeat that. The interest owed the Fed on the outstanding money supply can only be paid by borrowing more debt from the Fed and paying the interest on the old debt out of new principal just borrowed. The Federal Reserve System is a pyramid scheme of the highest order. It is designed to enslave the American people. The Federal Reserve System was designed to indebt the American people and their government to a relatively small cadre of elite financiers who run a shadow government unaccountable to anyone inside the United States federal government. For this reason, under the Federal Reserve System, it is impossible for the United States to become a nation other than one that is completely encumbered with debt. The money supply itself is debt. In 1913, the Congress gave away the right to create interest-free money to a corrupt and corrupting shadow government and body of influence, one that maintains its position of influence by both buying and enabling the buying of influence over the decision of its nation's leaders. In 1913, the United States government sold America out. It made a deal with the devil. So you might say, well, let's audit the Fed. You've heard that before. Both Georgia senators advocate auditing the Fed, and for years, Majority Leader Harry Reid argued for a Fed audit. But of course now Reid tells us that a Fed audit is not necessary. Now why would any responsible representative of the American people not want to know what the nation's central bank is doing with the money supply? That's just a rhetorical question. Obviously, whether the Fed should be audited or not is simply a ball these people play with, tossing it back and forth, whomever needing political cover at the time receiving it. In 2009, Ben Bernanke testified before the House Banking Committee and indicated that the General Accounting Office audit of the Fed would not be advisable. When he was asked why that might be, here's what he replied.
Do you think it would cause problems for the Fed or for the economy if that legislation was passed?
My concern about the legislation is that the GAO is auditing not only the operational aspects of our programs and the details of the programs, but is making judgments about our policy decisions that would effectively be a takeover of monetary policy by the Congress, a repudiation of the independence of the Federal Reserve, which would be highly destructive to the stability of the financial system, the dollar, and our national economic situation.
Oh, really? But despite Mr. Bernanke's objections, did you know that in 2011 they actually did perform an audit of the Fed over the time period between 2007 and 2011? You wouldn't have heard it on Fox News. Let's take a look at what they found. $16 trillion had been secretly given out to U.S. banks and corporations and foreign banks and governments everywhere from Southern Europe to Scotland. Between December 2007 and June 2010, the Federal Reserve secretly made payments, and virtually none of this money had been returned, and it was loaned out at 0% interest. So the American people, through their government, have to pay interest to the central bank, but foreign banks and governments do not. So who received the $16 trillion? Just a few of them. Citigroup, $2.5 trillion. Morgan Stanley, $2.04 trillion. Merrill Lynch, $1.95 trillion. Bank of America, $1.3 trillion. And the rest are merely hundreds of billions. So I'm not going to go through them. So let's do the math. If that money is not paid back, and it stays in circulation based upon 300 million American citizens not already on the government dole, that $16 trillion cost each American man, woman, and child $53,333. It cost a family of four $213,333. Remember what Andrew Jackson said. The banks speculate on the breadstuffs of our country. When they win, they divide the profits amongst them. And when they lose, they charge the loss to the central bank. They are a den of vipers and thieves. Notice the biblical reference here, Steve. These are the money changers in the temple. They are the only group against whom Jesus Christ was ever recorded committing a violent act. That should tell us something. The banks of the Federal Reserve System operate with virtually no risk, gambling with American wealth, dividing the profits when they win, and enlarging the money supply through open market operations when they lose, effectively charging the losses to the American people. Are you beginning to understand how the Federal Reserve is stealing your future? All right, I want to go through TARP and quantitative easing so that you can understand how the Fed is accelerating the covert confiscation of American wealth right in front of your eyes, the eyes of Congress and the President of the United States. What was TARP? It's also known as QE1, Quantitative Easing 1. TARP, the Troubled Assets Relief Program, was nothing less than legal theft by taking of the American Treasury by the act requiring the borrowing of a principal amount of over $800 billion, which was added directly to the national debt, which was then used to pay directly to Fed member banks. The banks who own the Federal Reserve System stole your money outright and did it legally. And they left you further in debt in the process. So the banks lost the money by gambling. You paid them back their losses. You went in debt to do so. And now you have to pay interest on the amount of their loss back to them. Are we stupid?
Yes.
Or we're just uninformed?
A little of both.
We're very uninformed. What was it Hosea said? Our people perish for a lack of knowledge. That's where we are. We've got to raise our game. We've got to know more about what's going on in our world. So anyway, our senators and our representatives either have no idea what's going on or they sold us out. I don't see how it happens either any other way. TARP was a way to directly remove wealth from the American people, give it to the private banks gratis, place the American people further in debt to those same banks in doing so. QE2. QE2 was legal theft by conversion in a theoretical sense because each new dollar placed into circulation purchases an asset of value that increases the value of the American money supply. The value of a dollar is equal to the value of the American economy divided by the outstanding money supply. Whatever that theoretical number is, that's the value of a dollar in any particular moment. Under QE2, even the normal fractional banking reserve requirement was waived, and in lieu of a reserve requirement, the cash-strapped banks were able to place an IOU with the Federal Reserve, at which time they could lend out 10 times the amount of the IOU in the form of loans. Funny though, none of the banks increased their loan portfolios. Instead, what did they do? They purchased massive amounts of U.S. debt, treasury bonds, bidding up the cost of treasury bonds, lowering their yield to historic lows, which is why we have had such low interest rates. But even if the yield were merely 1%, which it wasn't, it was greater than that, the interest paid on those risk-free bonds with no investment made gave the banks an infinite yield on 10 times the face value of a mere IOU. In so doing, the banks increased the money supply by the amount of money which they purchased the treasury bonds. You don't have to know exactly how that happens, but that's how it happens. As the government pays its bills, the money supply increases, which lowers the value of each dollar in your pocket and indebts the American people to the banks all the more. There was QE3, which we're presently under. QE3, which is also known QE infinity, is legal theft by conversion in several respects. Under QE3, the Fed, as the central bank itself, rather than the member banks, are directly inflating the money supply and indebting the American people at the same time. They're doing it by purchasing U.S. Treasury bonds at the clip of $45 billion per month. And they are buying the American debt with the money created with mere computer keystrokes. And so each money, the wealth of the American people is being devalued by the proportion that $45 billion represents to the entire money supply. And that same amount is due and payable directly to the Federal Reserve at interest, which is double jeopardy. They're inflating the money supply and then putting us in debt at the same time. Simultaneously, the Fed is purchasing directly again mortgages bundled as securities from various sources to the tune of $40 billion per month. And so when any of these mortgages are not paid, the Federal Reserve will foreclose and take ownership of the property. How long does it take you to pay off your mortgage? 15, 20, 30 years? Well, the Fed is buying up mortgages all over America, just like yours, using computer keystrokes in a fraction of a second. How long? So under QE3, the money supply once again is increased by $40 billion on top of the other $45 billion per month, decreasing value of your money and the prorated share of the money supply that you own. And when the economy implodes because of the collapse of the dollar, and you're laid off and you can't work, then the Federal Reserve, in the man of Ben Bernanke, is going to take ownership of your property, earning the right to foreclose, having made a few computer keystrokes as commander-in-chief of the American shadow government banking system. So what we're seeing that is over time, through legalized fraud, legal theft, and theft by conversion, the Federal Reserve is co-opting the wealth of America, stealing the wealth of America, your wealth and your future. They are covertly shifting the wealth in America from the people to the banks of the Federal Reserve's shadow government banking system. And as the 2011 audit shows, they're also sending your money to their cronies all over the world. So what is QE3 costing you? Just figuring this one illicit program called QE3, as it operates today, and assuming 300 million effective Americans not already living on the government dole. The cost to each American, just by a factor of increasing the money supply, is $283 a month. For a household of 4, that's $1,133 a month. That's $13,600 a year. You might say, well, look, Hank, I know my money's losing value, but it's not losing value that fast. Well, that's because the clock really hasn't started ticking yet. As long as Bernanke is stuffing money into the economy at the same rate or higher than the interest clock takes it away, the balloon keeps inflating. The surface tension on the balloon, if you want to think of it that way, is what keeps the value of your money somewhat stable. But as soon as Bernanke stops stuffing money into the mattress, as soon as he stops blowing up the balloon, the leak in the balloon will cause the balloon to deflate. And the true value of the money supply will seek its own equilibrium. At that point, we're likely to see a major economic event. The dollar will necessarily sink in value, and very quickly. At the same time, the drop in the demand for U.S. Treasuries, because there will no longer be buying any, will require that the yield on Treasury bonds must increase. The world will have to decide on what gambling on U.S. Treasury bonds might be worth. Under a rampant inflation scenario, the yield on Treasury bonds would likely have to be greater than the inflation just to induce someone to buy them. So what is the end game here? Good question. One that the Federal Reserve is not going to answer for you. But there are enough data points for reasonable people to make informed judgments on the answer to that question. Those data points indicate that this is all about destroying American currency, and with it the American economy, and then coming to the rescue with a new global currency, sponsored by the parent company of the Federal Reserve, the world banking system. This new global currency would ultimately exist as a cashless currency, an electronic currency, one in which a stop could be placed on any particular dissenter's accounts. To these people, currency is not a medium of exchange. It is a medium of control. And so, I appeal to the Tea Party as an honorable, viable, and truly patriotic institution of loyal Americans. I urge you to abandon any sense that the way to responsible government is at this time through fiscal responsibility. In the present environment, the idea of fiscal responsibility in our federal government hardly even applies. When the central bank can print an amount equal to the mammoth and increasing national debt and distribute that money to its cronies all over the world without even charging interest and not collecting it back, then that kind of money has ceased to be an economic tool for the American people and has become merely a tool of convenience for the private banking system, the purpose of which is to obviously, covertly distribute American wealth across the world. The battle for fiscal responsibility in our federal government, even if it were valid at some time in the past, is over. That battle is lost. The true battle, which will decide the war that we were fighting to restore the American Republic, just like Jefferson told us, is one to restore the American sovereign currency. I urge the Tea Party to adopt this as its primary message immediately. There is no time to waste. And that brings us to part 3, which is the shortest part, the solution. And actually, this is the easiest part. The U.S. national debt could be paid off tomorrow. And the American Republic could be restored to its rightful path. We just have to follow our founders' advice. This organization talks about our founders. We need to listen to them and do what they say to do because they had every honorable intention behind them. And this would be poetic justice, since the Federal Reserve currency was all created with keystrokes. As it was borrowed into circulation and is therefore owed back to the Fed as keystrokes, all that would be necessary to pay off the national debt would be to collect all of the Federal Reserve currency, returning it to the Fed in whatever form it might exist, simultaneously issuing U.S. Treasury currency of the same face value and the same form, issuing a check made out to each holder of U.S. debt paid in U.S. sovereign currency and for the full amount owed, nationalizing the 12 regional Fed banks as U.S. national banks, and thereby nationalizing the outstanding loan portfolios of those regional Fed banks. And finally, using legislation severing the ties that exist between the commercial member banks of the Federal Reserve System and the Fed. At that point, the U.S. Treasury would have an income stream equal to that of the entire Federal Reserve. Whether there would be any need to borrow additional funds would depend on fiscal considerations that might dictate that matter. All this could be done tomorrow, at which time the United States would no longer necessarily have to borrow money to operate. America would no longer be under the influence of corporate fascist special interests, and very likely a peace dividend the size of our present national debt would be our reward. This is the issue. Whether the United States and its people should continue to be held hostage by a private central bank and all that that means, or whether we should restore the republic of our founders and once again live under the blessings of God-given liberty provides. As always, the people have the power. They just need to exercise it.